Catalysts. What could drive Bitcoin price? Bitcoin. Emotions, narratives and catalysts drive its price. Psychology is key in investing. Investors are not only guided by logic, they are also moved by emotions such as fear or greed and cognitive biases. Narratives have a special power. A good story can be more persuasive than a bunch of facts. For example, an investor might be attracted to the vision of a CEO, investing in his or her company because of the story it tells, beyond the strength of the business model. Bitcoin. Why volatility was crowned queen. Recognizing that investors are human is essential. Their decisions are not always rational. They are influenced by their emotions and experiences. Understanding this can help us better understand market behavior and, perhaps, make wiser and more humane investment decisions. To understand the influence of narratives and catalysts on the market, let's imagine a time travel to January 2024, a decisive month for Bitcoin. 3 key factors converged to raise its price to extraordinary levels. First, the expectation that the SEC would approve Bitcoin ETFs generated a lot of excitement. The approval was seen as a crucial step towards mass adoption of the cryptocurrency, which would attract institutional investors to the market. This optimism was based on the belief that ETFs would facilitate significant capital entry into the cryptocurrency space. The second factor was the Bitcoin halving, a scheduled event that halves the reward for mining new blocks. This mechanism decreases the rate of issuance of new Bitcoins, limiting supply and, theoretically, increasing its value if demand remains or increases. The third element was the economic context, marked by controlled inflation and signals from the Federal Reserve of possible cuts in interest rates to stimulate the economy. This created a conducive environment for assets like Bitcoin, which are seen as risk assets that thrive on increased liquidity and an increase in the level of greed. Investors, motivated by these events, anticipated an increase in demand for Bitcoin, greater liquidity due to rate cuts, and tighter supply following the halving. The narrative that institutions are coming in and buying Bitcoin captured the essence of market sentiment. The belief that the entry of significant institutional investors, attracted by ETFs and the prospect of a scarcer and more valuable Bitcoin, would boost the price, became a powerful catalyst. Remittances in the digital age. Why cryptocurrencies are not yet dominant. As a result, Bitcoin saw a significant rise, reaching new all-time highs. The narrative about the arrival of institutions, thanks to ETFs, resonated strongly, driving demand and the price of the cryptocurrency. Of course, it is crucial to remember that the cryptocurrency market is extremely volatile and its future is uncertain. Although the aforementioned narrative explains the increase in January 2024, future price movements will depend on multiple factors, including the global economic situation, government regulation, and continued adoption by users and institutions. In markets, when people anticipate that the price of something will rise, they tend to buy. This collective action can cause the price to actually increase, confirming the initial belief. This phenomenon, known as self-fulfilling prophecy, is common in economics and can intensify optimism, making early believers appear visionary. Often, these bull cycles are driven by retail investors who speculate that institutional demand will drive prices even higher, creating a sort of paradox where expectation influences market reality. Cryptocurrency investors, always with their eyes on the horizon of possibilities, look for signs that portend an increase in the value of their investments. Past events, such as the Bitcoin halving, the approval of ETFs or the old expectations surrounding the monetary policies of the Federal Reserve, have already left their mark on the market and now belong to the domain of history. What really matters to investors is what is to come, which can drive the price up and generate profits. For the price of Bitcoin to continue rising, new catalysts are needed to spark enthusiasm and confidence in a promising future. These may include greater adoption of Bitcoin by well-known institutions and companies, which could mean an increase in demand and therefore price. Technological developments that improve Bitcoin's functionality could also play a crucial role, attracting new users and investors. The integration of Bitcoin with the traditional financial system could open the doors to greater liquidity and accessibility. Furthermore, clear and favorable regulation by governments could decrease uncertainty and increase investor confidence, which in turn could boost the price. Inflation remains the Fed and its dilemma. Currently, Bitcoin and other risk assets appear to be responding to the anticipation of a change in monetary policy. Investors are alert to any signs of economic slowdown, following the logic that bad news is good news. The expectation is that if the economy slows, the Federal Reserve could reduce interest rates to prevent a recession, which would be favorable for risk assets, since looser monetary policy tends to increase risk tolerance among investors. In other words, a major economic slowdown could be the catalyst the Bitcoin price needs to continue rising. Now, investors should be well informed and do their own research before making decisions. The future of Bitcoin, like that of any investment, is open to multiple possibilities and is impossible to predict with certainty. The key is to stay abreast of developments and understand that the market is always in motion, driven not only by concrete events, but also by expectations and collective psychology.